Good afternoon, traders, and welcome to today's daily market review. It is Tuesday the 18th of August, and today we're going to be looking at the currency pair euro versus the Canadian dollar. Now, since March of 2014 right up until April 2015, we've seen a rather large downtrend. The market has fell by around 2,562 pips. Since this time, we're beginning to see a retracement to the upside, and the retracement is taking a form of an AB equals CD pattern. So on this weekly time frame, you can see that we've plotted the ABCD pattern, and we've also plotted a Fibonacci price range. What we're going to do, we're going to dial down to the daily time frame, and this is so we can clearly define the pattern, and also we can zoom in on the price range and plot more accurate Fibonacci price zone. So the current Fibonacci price zone on this currency pair for the weekly is 145.64 to 146.53. Now, as we zoom down to the daily time frame, we can see that we have a clear Elliott wave count to the downside. So we have wave 1, 2, 3, 4, and 5. These in their own parts also break down into 3 and 5 distinct parts. And here on the AB equals CD pattern that we saw on the weekly time frame, we can see that in the last leg that it also clearly breaks down into 5 waves. So as usual, we're going to apply our 5 factors to the charts of the market, and that will be in momentum, pattern, price, time, and of course our Elliott wave analysis. So in terms of momentum, we have the market in the overbought zone, and that is the same on the weekly time frame. In terms of our pattern, we have our AB equals CD pattern, with the last wave breaking down into 5 distinct waves. In terms of price, we've identified a Fibonacci price zone of 145.39 to 156.53. And in terms of time, our high probability time window is the 14th of August. Now, in terms of the time window, if we take a look at when the market has made its first reversal after entering our zone, it was exactly on the 14th. So in terms of our time window, we're looking fairly accurate there. In terms of our price, the market came into the zone. It went through around 3 of the Fibonacci ratios, and then found resistance at the 0.618 internal retracement of the entire move to the downside, which was at 146.07. So from this point, we're going to expect in a reversal to the downside, and what we're going to be looking for our entry is a taking out and then a closing below the low of yesterday, which was 144.68. So once we see the market violate this level, we'll then be looking for a valid entry signal for us to enter this trade to the downside. Once we've entered the trade, we'll be looking for price to be reaching the regions of in and around 130.24, which is the swing low of our wave 5. So on violation of yesterday's low, we're going to be looking for a valid entry signal, and then we're going to be looking for price to reach in and around 130.24. Now, if we go to our MT4 platform and we look at the price action for today, we can see that this bar here is a rather aggressive bar on the hourly, and it has violated yesterday's low. Okay, so if we take a look at this bar on a 15-minute chart, we can see that just before the US Open, they had a very aggressive move to the downside, and this has taken out the low of yesterday. So in terms of our entry criteria, we're now looking for on the 240 one of our entry triggers to take place, and then again we'll be entering this trade and looking for a target in and around 130.24.